Yeah, hey there, it's Paul here from freedomtraderpro.com. Now in this video I want to talk about should I trade using indicators, so stay tuned. Okay, if you're brand new to this channel, please consider subscribing. I put out a couple of videos each and every week to help you in your Forex journey. So in this video, I want to talk about should I trade or should you trade using indicators. Now, personally, I don't use any indicators on my charts. I trade with completely naked charts, just using the candlesticks. Now, there's one big problem with indicators, in that is that they lag, okay? All indicators are lagging bar price, bar the candles, which is price, and volume, okay? Everything else lags. So let's just put a couple of indicators on the charts. So let's just say you want a moving average. Let's just say you want Bollinger Bands. What else have we got? RSI. Let's have the MACD. Let's just put those on for now. Now, basically how it works, all of these, I don't know what happened to the Bollinger Bands. I've got something other weird thing going on with those. Let's put some proper Bollinger Bands. Bollinger Bands, right, there we go. We now have some Bollinger Bands. And let's put another EMA on as well, just so that I can help explain EMA. And let's make this one, let's make this EMA 50. Okay, so some people come along here and they have all this kind of stuff going on their charts. And to be quite honest with you, it just looks a complete mess. I've seen people with so many indicators, I just do not know how they can even start to understand what's going on with it, because there's just so much going on. And this is kind of potentially what things look like if you let it get too messy. Now, the problem with indicators is that they lag. All indicators are based on previous price. So let's just get rid of these. Let's get rid of the Bollinger Bands. Let's get rid of the RSI and the MACD for a minute. So let's just say we've got an EMA 9, which is this one here, okay? And we've got an EMA 50. Now I'm just going to make these slightly bigger so that we can see them on the charts. I'm going to make them nice and thick so that you can see. Let's make the EMA, no, let's just leave them as they are. Colours don't matter too much. Okay, so we've got this one here, EMA 9, and we've got an EMA 50. Now the EMA 9 is based on the last 9 candles of price. So that is the average price over the last 9 candles. EMA 50 is based on the average price of the last 50 candles. Now if you have an EMA 13 or an EMA 5 or whatever it is, it's based on the last 13 or the last 5 candles. So EMAs can be handy if you just want to see, okay, am I above the EMAs? Am I below the EMAs? Am I in a bullish market or am I in a bearish market? So they can be handy from that point of view, but they are built on price. They are built from price, so consequently they are a lagging indicator. Now every single indicator in here is a lagging indicator, apart from price itself and volume. Everything else is a lagging indicator. So if you're looking to enter a trade, some people might come along here and go, okay, we've got a cross of the EMAs here. I could look to enter the market here for a sell. Okay. Now, yes, you could do that. Yes, people might have, they might be getting some results with that, but ultimately they're entering a trade based on an indicator which is based on price, which is lagging, okay? So everything that you do is based on something that's already happened, so you're always going to be late to the party, effectively. If you enter using an indicator, you're always going to be late to the party. Price has already started moving in a particular direction, it's already started moving in a bullish or a bearish direction. By the time the indicator, in this case, by the time the indicators have crossed and you think about getting into the market, you've already lost some of this movement effectively up here. And what normally happens then is that affects your risk to reward. If you can get a nice tight entry, you can get good risk to reward. If you're not getting in until halfway down the move, your stop loss has still potentially got to go up here somewhere. You're still looking at, I mean, you might be able to put your stop loss above here, or you might be looking at it above here, or you might want to put it up here. But either way, your stop loss is going to be a lot bigger because you've entered the market from something that is already lagging. So in my opinion, should I trade using indicators? Yes, there are some that can be handy. As I say, EMAs can be handy to know if you're in a bullish or a bearish direction. Some people might say, okay, let's have an EMA 200. So based on the last 200 candles, anything above here, you're in a bullish market, anything below it, you're in a bearish market. But then you get a period of consolidation and nobody kind of knows where they're at, because 1 minute it's below the EMA, then it's above, and all the rest of it. So in my opinion, indicators, because they lag, personally, I don't use them at all. There's a couple of things, as I say, like EMAs, that can be handy. If you're a beginner, you know, it can be handy to have a couple of indicators so that you kind of know where you are in the market a little bit. But because they're lagging, they're always gonna potentially get you into the market later than you would if you were just using pure price action to do your analysis and get into a trade. So hopefully this kind of answers your question. Hopefully this kind of makes a little bit of sense for you. Any questions, leave me a comment below. I'll do my best to answer them. And if you're not subscribed to this channel, please consider subscribing. As I say, I do put out a couple of videos each and every week, and I look forward to talking with you again real soon. Take care.